And we are live. Good morning to everybody, and welcome to Behind the Markets. I'm your host and co-host Munyumba Mutwale, and I'm here with my brother Vernon Stiffy. How are you doing on this Friday?
Never better. It is wonderful. The morning started on a very good note. We have so much, of course, to be excited about. We have everything. We have an economy where we're seemingly looking at, decreased fuel pump prices. We are seeing the cost of living going up. Life is good. How's life on you?
Mine, I never focus on things I can't control, Vin, and I never focus on things I can't control. I can't control how well the economy grows. I can't control how fast inflation moves. I can't control what interest rate banks give, but I can control my state. I can control my income. I can control my work ethic. That I can control. I have
Mm.
more control over that. So I focus on the things I can control, and all I can tell you is it's all good. It's all gravy. Right. So, to everybody, today it's Futuristic Friday. So today we're going to be covering some of the news. Basically, we're going to go through some markets, basic some of the key stories that we've seen on the markets, and then also simultaneously, Vernon, we will be going into a bit of analysis on some futuristic trends in our charts of the day, and we'll be then talking about the actual futuristic. So we'll then be talking about our actual futuristic topic of discussion. Today, we're going to be talking about the winners of the new economy. Everybody's wondering how's automation, all this stuff going to treat us. I'm going to talk about three positions you want to have in the new economy. Okay, you really want to tune in for that part, especially if you're younger. You really want to focus on which of these three are you going to be to thrive in the new economy. That all rhymed. That all rhymed. It was an accident, people. It was not planned. Right. So let's get into today's topic. It is Futuristic Friday. This handsome fella right there in that dapper suit is about to take you through your future. Let's take you into the markets and how it looks. The kwacha has gone deeper into the 20s against the dollar, 20.14, 0.42% down again, 2.16% down on the week. And the dollar is up 11.29% year to date. So it is in a very strong buying pattern and continues. Stock market was frozen yesterday, not any activity. We did get results coming out. On top of that, we got the Pomozi 4 results, which we'll be analyzing starting next week, and we'll also go through the Madison finally has submitted all of their results, and we finally caught up on their financials. So it's about so we'll see that coming out. But we are seeing the stock market at 8,188. 8188.89, up 11.6 year to date. We're also seeing that the bond index was up the usual 0.06% and down 0.35% based on the currency movements. And we are seeing again that we are seeing that what's it called? The interest rate did come down a little bit yesterday on the secondary bond market. Now the boomerang effect is still happening in terms of the rand. So we are seeing that the rand is up 8.82%. This is a signal for cross-border traders who do get things from South Africa that we might be importing a little bit of inflation, because 8% increase in the cost of the rand is going to affect the cost of the goods that they're bringing in for trading purposes here. So those who jump on buses, go to South Africa, buy things to come and sell them here, they're going to be bringing things slightly more expensive. Mainly because of that. And you've also seen the dollar is also up 10.3%. We did see these things decline, so we don't know if it's just going to be a quick dunk, and they're not gonna pass on the cost. But we are seeing that the currency curves have moved in a boomerang. Basically, the dollar is higher than where it was 2 months ago. The rand is about to catch up to where it was. It's had a bit of a sloppy ride, but it was up 1.21% yesterday. So these are some concerns that are trickling into the market. We did see that our bond market, as I said, up 11.9% year to date, and the one in dollars is about neutral now, only up 0.55% because it's lost 7.8% year to date. I'm sorry, on the last month, mainly because of the FX rate. So you can see this is the reverse boomerang happening for the. You can see it on the chart there. It's what we call the reverse boomerang happening for the US dollar GRZ bond index. So in other words, this is what bonds. This is the index of how bonds are performing in dollars. Specifically, if you're a Zambian living abroad, I would ask the question: where are you retiring? If you're retiring in Zambia, look at the GRZ index in Kwacha. If you're retiring in the US or whatever country you're in, look at it in dollars, and you'll start to see that that may be the issue for you. But on the other hand, here's how it plays out for you. Now, taking a look at where we are in terms of the commodities board, we did see that copper was up slightly 0.13%, but did danced down a little bit, 0.56%. In terms of oil did move down slightly a little bit. There is talks about the Iran nuclear deal being struck, or a temporary deal being struck with Iran. And we did see gold was up 0.21% in dollars. Now, looking at the wealth insurance assets, cryptocurrency down 0.7%, another sell off day, with Ether down 0.3%, but gold up 0.63% in Kwacha. So these are your wealth insurance assets, or what we call your kind of hedging assets, or disaster hedge assets. Should the whole financial system melt down, you always want to keep a little portion, not too much, 5 to 10%. People, 5% is really the recommended amount to be keeping in things like cryptocurrency, but 15% in total of dollars, gold, and things like cryptocurrency, 5 each. That works out perfectly. Now, if you look at where we are in terms of year to date, bonds up 11.9%, stocks 11.6, USD 11.3, and gold up 20.8. This is showing you that our market is still sitting in a slightly defensive position, waiting for our debt restructuring to take off. Because then you'll start to see the other things. You'll see the swing effect happen on the other side. And finally, Vernon, let's take a look at what's happening on the four horsemen before we go into our deep dives. South Africa's current account did decline by 66 billion rand from last month. We did see that South Africa's year-over-year manufacturing did rise 3.4%, but only up 0.5%. These could bring down the value of the rand going forward. U.S. short-term interest rates auctioned lower yesterday, while we did also see the EU employment figures rise faster. Jobless claims in America declined again, while U.S. U.S. wholesale trade sales went up by 0.2%, but unfortunately, inventories were down 0.1%. We're waiting for China data on CPI. We'll be talking about that on the other side of this break before we dive into some deep dive stories. That, Vernon, is our roundup of the markets. We'll catch you on the other side of this break.
All right.
And welcome back to everybody. And we're back from our break. So let's get back into it. I did see on the other side, I'll give you some data on Chinese inflation, which is very important because China is the second largest import source for Zambia. Remember that we get a lot of our electronics from China, we get a lot of products from China. Remember, there are a lot of Zambians who just go and get containers from China to come and sell here. In terms of their business. So, what we've seen is Chinese PPIs are down 4.6% year to date. I'm sorry, year on year, meaning that the cost of goods coming out of Chinese manufacturing plants is really low. On top of that, we've also seen Chinese inflation down as well. So the risk of imported inflation with a yuan that's a little bit weaker and also lower costs coming out of Chinese factories, we've got deflation coming out. There's been consistent deflation since November, means that trade with China is proving to be cheaper. It's only the logistics of getting the product from China to here that's going to be the problem because of transportation costs, which have then had to go up recently due to the fact and also the shortage of things. Remember that China had strong lockdowns before, so getting things out of Chinese harbors and ports used to be quite difficult. But in terms of that, the products from China that can get here, be it through some of the Chinese stores, even here in Zambia, they're actually going to get, they're leaving China cheaper. The only thing that's risking it now is the weakness of our exchange rate. So while the cost of products is down 4%, unfortunately our exchange rate is also up 11% year to date. This is a kind of net off problem again. So these are the two factors playing against each other. Remember, we track two main. If we're looking at our global our imported inflation, we just have to assess the PPIs and the indices of India, China, and South Africa. These three are the main sources we're looking for. And if we look at their currencies and their PPIs, it can actually give us an idea of how expensive things that are being imported are projected to come in. So I think that's just an example I want to just quickly look at there. So Chinese import data, Chinese PPI data. Now their CPI data is also showing the weakness of their economy. The Chinese CPI, the Chinese inflation data, is currently sitting at 0.1% year to year. Yes, people, the Chinese people have only got price increments right now of 0.1% year on year. That is slowing down their growth and sign that the Chinese consumer is in a weak position. Opening up, Vernon, to our first story in the deep dives. In our deep dive story, we have seen that soya beans prices are still trading at depressed prices and risk decreased output. Now we have been talking. We did see that FNB did put out their monthly agribusiness report, which shows that soya trading is at 320 metric tons, $320 per metric ton. This was on our news story that we saw, and as much as which is much lower in the 2022 levels. Now we added on to this and actually found out that global prices are currently at a collapse level due to subdued Chinese demand. So I've just told you that the Chinese consumer is struggling. Okay, so therefore the CPI data is actually showing that there's weak Chinese consumer demand. Therefore, you are seeing low soya. Now, remember, where does soya end up? Remember that China has a huge pork industry. Okay, that's one of the delicacies that the billions of people in China eat. And as a result, soya is very important for pork. So when you actually see that the consumer is struggling, therefore pork demand struggles, therefore soya struggles as well. So that actually now explains where we're going down soybean. Now that's actually explains why we're going down the line in this. Now let's get into some of the soybean data that we're actually seeing here. If you look at soybean flat prices, now forget the blue price because that's the futures contract, but this comes from the Chicago index. If you actually see the price of soya in terms of soybean in terms per metric ton, if you look at the orange line, that's the one that's important. That price has gone down from $750 down to below 500. So that's a third of its price on the global market. And it's already continued to start coming down. Part of the things we're also seeing here is that next year's output in terms of soy is expected to go up. Soybean production is expected to go up mainly because of Argentina. As you can see, Argentina is expected to increase from 27 million tons to 48 million tons of soybean production. Okay, so America is expected to go up by about 5%. Brazil is expected to go up by 5%. Remember, Brazil is the biggest producer for the globe. Now they are expected to also go up by 5%, but Argentina is doubling its production next year. That is increasing soybean production at a time when the Chinese consumer is a little bit at its weakest. So this is where the problem is coming. Oversupplies on the market. China itself is not producing so much. You can see that their soybean production is only scheduled to go up by zero point 0.2. India is expected not to increase. Canada, Paraguay, it's a slight increase, but the biggest increase is coming from Argentina. Argentina is going to consist of half of the world's soybean production increase as of next year, in respect to the 2023-2024 farming season. And this is what's affecting it. Now, remember, soybean production is also what's affecting the oils. Remember, these cooking oils and everything that we've been importing. We said the oil prices were down 48%. So you can see that the reduction of soybean production, soybean prices, is actually affecting the cost of oils. So this is actually what's bringing everything down. It's the weaker Chinese consumer that's actually affecting things. As you can see, one of the biggest contributors in terms of growth. Now, this is going outright. Brazil is the one who has been growing. This is the history of soybean production. You can see that it was the United States that was the king of the hill, but Brazil has been the one which has actually done a majority of the growing in the marketing years. You are seeing Argentina starting to reflate back to where they were back in 2021. They had a weak season last year, so that's also what pushed prices up. Argentina was out of the equation. Now they're back in the equation. We're about to experience record levels of soybean production globally. So to all the soy farmers, this is the issue that we actually are facing going forward, and this is what makes it a little bit difficult to get the product out at a high price. Now, Zambia said that we're going to produce about 700,000 metric tons, but that is still not going to be enough, and therefore we'll probably rely on imports. But the good thing is the price of cooking oil, of the oils industry, is actually coming down, mainly due to these price drops. So this is us now just digging a bit deeper. That's why we call this, Vernon, deep dives. We don't just leave it at the surface. As our Pentecostals say, we go deeper. That is the that is the point. Now, we did see another piece of news yesterday is that Parliament is to debate Section 16 of the NEMA Act. Kamfinsa MP Christopher Kangombe has said that next week he's expected to push a motion. I think you just read the story out on the break. That Parliament will urge the government to actualize Section 16 of the National Health Insurance Act. And this section compels the government to provide services to the vulnerable. So this is the actual provision of the act, Section 16. Now, it actually says a citizen or established resident may be exempt from payment of contribution under the scheme, includes a mentally or physically disabled person who is unable to work, somebody who's probably on disability by this point, an elderly person above 65, this one I've seen, and a person classified as poor or vulnerable by the ministry responsible for social welfare. So this is the important one that he's trying to now state. The people who are deemed poor or classified as vulnerable. Now, that is a wide net of people, Ved. That is, I think, where the big conversation comes. That's a wide net of people. So I've always tried to now have this conversation about healthcare. So a lot of people are looking at their retirement days and saying, I'll be fine. I'll be on NEMA. Okay? I'll be fine. I'll be on NEMA. That's what will take care of my healthcare expenses. What you need to understand about NEMA, firstly, that provision is already in the act. So he's saying actualize it. Okay, so they're going to try and debate the motion of how to actually get more vulnerable people onto it. Now, already NEMA is experiencing long queues. They're already starting to see that. They're already starting to see long processing lines. And the thing is, the wait times are already starting to increase. And that's already a sign that we are starting to stress the system. Now, if we're going to start using poor or vulnerable as the basis, remember, Vernon, 88 to 90% of this country lives in poverty. Okay? Just remember that. So if we're going to have a system where 10% are paying for NEMA and the majority are going to consume the services, we're just back to the public health system and we're undoing the health insurance system. The point was to create something that we could all contribute to try and help. And I know that it's always politically expedient to try and help market the situation. But remember, we need this thing to also be sustainable. Okay, you need a healthcare system that is sustainable. And I understand, I get where this is coming from. You can't tell those who are vulnerable they can't have healthcare services. So this is what I'm going to say to those who are able and not vulnerable. You better start thinking about Plan B for your retirement. We need to start looking at how to get. Now, I'm being honest here. Plan B in terms of healthcare, you may not find the service at Nima to your liking when you are retiring, because at that point, the number of people utilizing the service may lead you to wait. And the older you get, the less you can wait. Okay. Healthcare becomes like food. Healthcare services becomes like food when you're older. When you're 65, access to pills is really important. Access to drugs and medicine is really important. You live off that stuff because the majority of us are not making good health decisions now. So, two things here. One, you can opt to start doing what the rest of us are starting to do and realizing that it's time to take your health seriously. Okay. Now, women tend to do this a lot, and this is why women are projected in the next 20 to 30 years to outlive men by 8 years. Okay, the average woman is going to live up to 79, 80. The average man will die by 71. Okay, or just below 70. And that is simply because men live very dangerous lives. We drink more, smoke more, party more. We work more physically laborious jobs. No, seriously, we do back-breaking labor more. So the reality is, look, the life of a conductor, Vernon. That's a rough life, bro. That's not an easy life. So the thing is that we go into old age with more bruises and bumps. And by that time, we don't have much going. And then on top of that, we take health less seriously. Women, due to the fact of things like childcare and that stuff, tend to go to the hospital at least on an annual basis. Men go to the hospital when they're close to death. That's the way we do things. Every 3 to 5 years, that's when a brother will step into the hospital. Okay, otherwise we'll self-medicate, we'll just whip out something and say it's fine. Guys even drink their sickness away. I've seen that before. No, the liquor will cure me, it'll cure me. Those are the things that we say. So already I can tell you that number one that most people need to start doing is, if you want to avoid being trapped in the costs of what is going to be a very expensive healthcare system, one, we need to start looking at becoming more healthy as people. That is one thing we need to stress, because the costs of healthcare can be reduced by living a healthier life in your youth. That rhymed by mistake, but I'm writing that one down. Okay, so I'm repeating that one. Okay, somebody better write that. Someone in the comment section has to write that one down. Okay, the cost of healthcare can be reduced by living a healthier life in your youth. So what you want to do is avoid having to, because the older you get, by the way, the less insurable you become as well. You actually become tough to insure, because you actually tap into the insurance system regularly. So it's the costs are higher. The drugs you're dealing with, because the sicknesses you're dealing with are more chronic illnesses. So you're gonna actually be dealing with those chronic illnesses as well. So here's why I say this. What's the use, Vernon, of you've saved up in your NAPSA, you've built your flats, you've built your bond portfolio, you've got yourself a passive income stream of, let's say, about 20,000 kwacha adjusted for inflation today, and then bang, half that money is going to healthcare management. You're buying diabetes drugs, you're buying health, you're buying BP medicine, you're buying all this medicine that by the time you now get there, half of your money that you're living off, and then you're stuck with half the money. You worked your whole life to give yourself a good retirement, only to hand half the income over to the healthcare system. Okay, so that's what you need to try and avoid also. So your healthcare now, and if the other thing you also want to start considering is post-retirement healthcare. Okay, this is a sign for that. So the NEMA Act already has provisions to now bring in who are poor and who are vulnerable. And that's a large part of the population, meaning that if you want to put yourself amongst those groups of people when you get to 65, because 65-year-olds don't pay for NEMA. That part I know for a fact. 65-year-olds do not have to pay for NEMA. They just go in and they utilize it and they get all the services. But the waiting times are going to start increasing. And unfortunately, the older you get, the less you can wait. So you can start going to, there's some service providers who offer things called post-retirement healthcare, where you start saving up for it now. It turns into an annuitized healthcare system. So you actually have the same health insurance you have now, probably with your employer. You can have that in your post-retirement days, where you can have access to premium healthcare. You can go to private health. You can go to private hospitals. You can get treated in the premium lines because you're using post-retirement. You're using post-retirement healthcare, which can actually give you health insurance all the way from 60 to your demise. That you may need to consider the same way you're planning for your pension. And the beauty of it, Vernon, is the younger you start, Sorry, mic check, mic check. I think we just had an issue on my back.
All right.
Okay, so I was saying there might be all this action. I speak with my hands. Sorry, people. I speak with my hands. I knock mics a lot. Just like I'm not holding a mic like this. But anyway, the point is, the point of all of this is that you might want to start saving early so that you can reach up to that. So look, this is a political issue, and most likely they're going to try and push that through, and that's a populist issue, okay? Because healthcare is important. Okay, access to healthcare is really important. So
Yeah.
and what that might affect, by the way, is if they start serving everyone, you may have some hospitals resisting NEMA. That may be the issue as well. Some of the private hospitals may say, "Look, we're okay with you serving the people who pay because then we know that you have the cash to pay us. But the moment you start taking on people who can't pay and you start saying the poor and the vulnerable, we know you're going to have cash stress. So no. How about you
Mhm.
that you keep that to yourself because you're asking the paying person to subsidize 90% of the economy. That's what you're asking to do. The paying 10% will subsidize the non-paying 90%, and as a result, you may start to get an issue here. Now, I will openly say, Vernon, there are two sets of people who should be on NEMA, regardless. Okay, regardless, orphans and widows. Okay,
Mhm.
that's a biblical principle. Orphans and widows must be on NEMA. Okay, that one they should be without any. If you're a child and you do not have your parents and you're orphaned, you must be given access to that. And if you're an elderly woman or if you're a widow, you must be given access to it as well. That is just something that even as the morals of our nation, we should embrace. Because look, if we're gonna call ourselves a Christian nation, that's there. And look, that population is not that huge anyway. Okay, but they're there and we must take care of them as a society. If you're orphaned and you're widowed, you definitely should be on NEMA. Okay, I think that's the priority of the people I would definitely agree with should go there. But I would say, people, if you can start saving up for your post retirement healthcare, because you know what the problem I've seen with most people, Vernon, is they plan their retirement the way they're living their life now. So you're 35, you're working, your workplace has given you healthcare, okay, and because you're young, you're not that ill, okay. So you start thinking 65 is going to be the same as now. This is why you're actually encouraged to plan 10 years for retirement. Start getting yourself into the groove of it. Why? Because you need to start understanding, okay, what are my healthcare routines going to be? What is this going to be? And I'm telling you, people, right now, that the decisions you're making now with your health, the decisions we're making now of not doing checkups, especially guys, the decisions you're making now are the things that are going to cost us later. And you've got to understand the cost of healthcare is going up, up, and up. So I think this is a very important story. And I know we tapped into it, but it is quite an important story and it will have an effect, has a ripple effect. So the advice I would give everyone is seek consultations on post-retirement healthcare. You need to start planning for that. And I'm clapping my hands because it's emphasis. That's how us black people emphasize. We clap. Now, the next one, the next story that we have in our deep dives is that copper is under pressure by weak Chinese signals. Chinese copper imports fell by 4.6% in May from the prior month. A sharper than expected export drop in exports pointed to nearer economic pain, especially for the massive Chinese manufacturing sector. So this in the short term, this is not good news for copper. However, oil fell on the potential of a Iran deal. Iran and the US are near a temporary deal that would trade sanctions relief in exchange for reduced uranium enrichment. So remember, President Trump said, "Yeah, no, yeah, you're not selling any oil on the market at all," because he calls Iran the Harvard for terrorists. So that's what that's what he called it, because he says they're the biggest training camp. So now, in exchange for ceasing
Yeah.
uranium enrichment activities, Tehran would be allowed to export up to 1 million barrels of oil a day to gain access to its income and other frozen funds. That would then now put another 1 million barrels of oil onto the market, circumventing the weak Chinese data. So that's why we saw oil under a little bit of pressure coming down. So let's take a look at our chart of the day, Vin. And I've been telling people from the futuristic perspective, is that oil is expected to go up. So this is the forecast of the battery, this is the forecast of all the battery minerals and how they're going to look going forward, and why around 2025 to 2027 you are going to see a strong push for them. So in 2022, what did we see? The price of copper shot up. And then in the second half of 2022, it came back down. Why? Copper was in huge deficit. Now it went back into surplus. So going from 2023, 2024, and the beginning of 2025, we are going to see projected copper surpluses. Okay, so this is a briefing from S&P Global's Insights. So they're projecting that there'll be copper surpluses. We're also going to see peak nickel surpluses in 2024. It's very important that we open Africa's biggest nickel mine. You see where our thinking is going here as a country. Okay, we opened Africa's biggest nickel mine, and now now around 2024 we're going to see prices starting to pick up. 2024 going into 2025. Cobalt, you can see in terms of the surplus, it'll also peak around 2025. Cobalt is the blue one. And we've also seen lithium. Lithium is going to, and Zimbabwe is going to benefit a lot because lithium prices shot up last year, came down back this year, and they expected to start picking up again next year. There is a race to secure lithium resources. There are plenty of this. It's happening in Chile. It's happening in America. There is a race to secure lithium resources right now. There is a battle happening, especially between China and America, as to who can secure these resources. So this just shows you how important we should be positioning ourselves as a country. So copper, you can see there's going to be a growing surplus all the way 2023, 2024, all the way up to 2025. So if you are invested in the copper stocks, I'm telling you to take a long-term trajectory with it. Around 2025, that's when you'll start to see copper prices. So your ZCCMs, Copperbelt Energy, African Explosives, these companies are going to benefit around 2025 from what's projected to be a huge copper price spike, somewhere around $11,000 to $15,000. So you're expected to see stronger cash flows from this, and you're probably going to see a lot of the mining companies holding back their supply until about 2026. That's when they're going to turn on the sprickets, because then they're going to see the prices going up because we're peaked in terms of the forecasted reserves. These are the supply-demand imbalances.
Yeah.
So we're going to go into a strong deficit with copper around 2027. That's when we're going to see copper and nickel and cobalt really raking in some strong prices. And from then going forward, we're going to see strong deficits in copper because the amount of projects that are going live are not going live fast enough for the growth in electrification of our grids. In other words, trying to get off fossil fuels and also EV production. So just trying to explain where this is going. So what's driving this? So let me give you another chart here. One of the key drivers you're looking at, just look at 2023's Bloomberg's New Economy Forum Electric Vehicle Outlook. You're expecting electric cars in Southeast Asia to grow by 235%. Okay, all passenger cars are only growing by 20%. Internal combustion engines are only growing by 18%, but 235% growth just in Southeast Asia, mainly China. India is expected to grow by 220%. Japan's expected to grow by 100%, and the internal combustion engines are actually expected to contract. China is expected to grow by 95%. So you can already see these huge levels of growth happening, mainly because of the growth of the electric car industry. So take a good look at what you're expected to see: a 62% growth in electric cars this year, while internal combustion engine cars are actually going to decline by 4%. So that whole growth of 2% of car sales is expected to be driven by the electric car industry. So this is the key driver here. So all this EV demand that's coming out, meaning we're expecting probably about 16 to 20 million EVs on the road, new EVs sold next year. Those EVs require 4 times the copper as a combustion car, 4 times the wiring, 4 times the conductivity, the running the motor, the electric motor that runs the car. That thing is made in copper. So there's already a lot of copper demand that's expected to come out from all of this. So all this EV demand is really going to kick into hyperdrive somewhere around the next 20, somewhere around 20. 2024, 2025, and then pushing forward to 2030. That's when you're going to see the real acceleration, because a lot of these big companies are actually cutting their combustion engine lines of their cars, your BMWs, your Benz, all these companies, they're actually stopping production of their internal combustion engines between 2025 and 2030, and they're going to be strictly EV producers. So you can see this transition is happening in real time, and that will then you can then position your stock portfolio to make sure that you've captured this. So this is a good time. It's actually painting a picture in the future for all of this. So now, if you're looking at the range, we're looking at the electric vehicle trims with at least 400-kilometer range. In other words, the cars that can move 400 kilometers. This is how they're looking also going up. So in terms of where the sales are going, you can also see these numbers peaking. Now take a look at China. China, in terms of the 400-kilometer range cars, those are the ones that actually use a lot of copper and lithium, by the way. They use a lot of it. So these ones are also going to be in huge demand as well. So this is where the push for these minerals, Zimbabwe and Zambia. So this is why I'm worried about us only involving DRC, because really the strong trifecta of EV minerals, Zimbabwe has a lot of lithium, Zambia has copper, DRC has cobalt. All three of these minerals, if you go back to this chart here, already are in this mix. This is the battery mix outlook that we're all looking at. Okay. And then finally, take a look at, even in terms of percentage of passenger vehicles by kilometers with zero emissions. Look at the way that number is going to move by 2050, where it's projected that 75% of passenger vehicles on the roads will have zero emissions. In other words, they'll be electric vehicles. If you're looking at electricity generation, they also want to move up from about 30% to 75%. So electricity generation and passenger vehicles, the two biggest consumers of fossil fuels, are planning on transitioning to about 75%. So we have to have a 30-year trajectory of how we're going to fit into this mix, and making sure that we're value adding, making sure that that's how we're retaining as many jobs as possible for development of economic activity. So that is a sign, Vernon, of where our economy is going. I don't know what thoughts you have on that, because that's what we mean when we talk about the green transition and how those holding minerals need to position themselves very carefully. And also, I always say, if you've got a stock portfolio, you need to start looking at that very carefully, because that is where the growth. So that growth is the secular story that's going to drive the growth of your copper-based stocks on the that are listed on the stock market. Anyway, I throw this to you, Vern.
I think, thinking futuristically will do a lot of good to investors, especially. And if you're going to be stuck on just, how generally, you've been doing business of late, then I think you'll be disadvantaging yourself, and you actually have a great chance actually of losing money. But if you can position yourself with the whole EV battery situation coming forward, and just how things will be faring on the market, I mean, these are money. It's quite okay. You can have your money in bonds now, and everything is looking great for you. But moving forward, looking at what is going to be more profitable in the coming years, I think it would be great that you start investing into that. And I was actually thinking and having a conversation with a few of my colleagues, and I'm telling them some of these jobs to start with will no longer be as paying as they are today, and you need to start looking at the future and what some of the possible nicer jobs would be, or how best can you enhance your job or your skills so that you can still maintain or actually get stop getting paid even more than you already are currently. So it's really about positioning yourself about the future and how you're going to make more money then. And if anything, just yesterday, of course, you were even sharing about a business idea, that you're talking about, and it's about what's going to come and how are you going to remain relevant in the system, or how are you going to facilitate for those things. Because if you remember the time, of course, there was the what do you call it, reimbursing of money. There were a lot of people who had little ideas or little knowledge about the new currency or the new notes and whatnot, and a lot of people actually were scammed for a 15 where one actually was exchanged for a 5 kwacha back in the days, because they never understood the value of both and the conversion and whatnot. So equally with the EV battery, there's going to be a lot of education that has to be done, for example, and people will not really understand how these things work. So in time to come, what do you think is going to be an interesting venture to look at and also be able to invest into it, that you'll be able to make return by the time everything now settles down, everyone is able to now to grasp the whole situation of the new investment in future? You would have made your profits, and you probably even would have stabilized yourself in a place where you establish yourself and you make money. By the time everyone is now getting the idea that, oh, this actually can really have some good profits, you'd have already positioned yourself and you actually would have grown by the time everyone now is jumping onto the business in that time. But if you want to do things now that they come and they say now it is profitable and you want to jump in all of it, you actually find yourself having so much competition unnecessarily because you were never prepared and you didn't think for the future in time to come. So I think with regards to money, keeping your money with the value that actually it has and maintaining and multiplying the value and so that you can have good returns, I think looking at the future will really do you a lot of good so that you don't end up keeping money where it will not be very profitable in future, and you just want to keep growing your money essentially. I think if you are into trading and just an entrepreneur or an investor.
So one of my biggest concerns, when and I think whenever I look at education in Zambia, not edu- not, let me not say education. Yesterday we talked about this issue where we said, look, the future for Zambia would be things like crypto mining. That's one of the things we need to start looking at because that's something that pulls young people out. And yet already, there's a dismissiveness amongst our people. Oh, yeah, no, that's not for us. Then somebody comes with an argument, no, it just won't work. One thing I've noticed about our people, and now there's a book by I'll what's it? Reference a book by Booker T. Washington called "Built Character Building." It's one of the four books I urge anyone that will help you understand self determinationism, how to actually build oneself. It's read his book Up from Slavery, The Future of the American Negro, Working with the Hands, and Character Building. These four books are extremely important. In character building, in chapter one, his first essay is called "The Two Sides to Life," and he talks about the bright side and the dark side. And he goes on to say people who look at the bright side, Vernon, tend to be solution oriented. They tend to be people who come up with things. They tend to be influential. They tend to be energetic. They tend to make progress. While people who always look at the negative side always fault find. They're always saying no. They always find ways to get everyone bogged down. And Vernon, he actually said, he said there are people, he said in the book, said there are people who are so negative and so problem oriented that when I see them coming down the street, I just feel like turning and crossing the street as to not bump into them, because of their negativity. And one of the things I've noticed about our people, now a lot of people are becoming optimists, okay? Now I don't want to blanket everyone here, but we have a broad spectrum of people who are the loudest in society who always speak negatively. Okay. And as a result, the progress of this country is always going to be hindered by those loud voices that are constantly speaking negatively. And that is why whenever somebody makes it, Vernon, we just assume they're a Satanist. Okay, we because we have normalized, and even Dumisani says this. You've normalized poverty. Okay, and anytime somebody tries to break away, you tell them, don't even dream about it. What's this? Stop doing that. What's this? You even tell people, why are you acting white? We say that to people. Whenever somebody's thinking progressive, we tell them, why are you thinking white? Why are you acting like that? Because you know what we're internally saying? That progress is for white people. And to us black
Yeah.
people, here, stay right here. Don't move. That's actually what we're saying when we say stuff like that. And we don't notice that we say stuff like that. So as a result, because of our negative side thinking, our pure risk management that we're always trying to do. That's why I said you can't build wealth on risk management alone. Risk management is a support activity to growth. Growth is at the center of wealth creation, growth and discipline. But risk management comes in to support it to make sure that growth is undisturbed and stable. But the core is growth. So creativity. So we need to have an education that stresses this. I think we've lost Vernon for a bit. So we need to have an education that stresses the fact that the people, if we're going to actualize a good, strong, and well future, we're going to do that. So that is my concern whenever we're looking at the future of, and something that Vernon was talking about, of how we're going to materialize the benefits of the future. We are only going to do that by making sure that our people are one positive in their outlook of the future. I'm not saying be disillusioned. I'm not saying go and tell yourself tomorrow you're going to be a millionaire. That's not positive. That's disillusioned. Okay. But positive means that in the 10-year spectrum of things, you see things getting better, and therefore you are working towards being part of that better. So we have to stress things like creativity to our youth. We have to stress them to start being creative. And in fact, Vernon, to also remember that any education you have is an investment in a future. Okay, you're not going to actualize the fruits of education today. So this is the problem I have even with the education we're giving ourselves and we're taking. We're mostly looking at only the needs of today and not educating ourselves for the trends of tomorrow. You need to start making decisions. If you're going to get into things like engineering, are you in the renewable space? Okay, because we're going to be talking about things like solar panels. We're going to be talking about all these kind of things. That is a space we're going to have to start moving into. Renewable energy is going to be that. And if you're not trained for it, how are you going to benefit and profit from it? That's a question you need to ask yourself. But speaking of the jobs of the future, Vernon, let's get into our topic of discussion. So I want to introduce a concept I talked about by two economists, Eric Byron Jolson. My goodness, I hope I got that name right, and Andrew McPhee. And they talked about something in their book, in one of their books called Great Restructuring. The book is called Race Against the Machine. And they basically said the great restructuring is as we see our technologies racing ahead and many skills in organizations lagging behind, we are seeing that more organizations are looking to use and leverage technology for higher profit margins. So we're seeing the rise of automation because computers are becoming faster and more intelligent, and the skills gap. People have actually been able to write up marketing briefs, Vernon, on AI. Do you know that we're even able to use artificial intelligence? I went on Google's new AI and I wrote an email in general. And then there's a new button at the bottom of your email where it can rewrite your email for you. And you can ask it to shorten the email, formalize it, or elaborate on it. And Google will rewrite it for you. Okay. So think about that. No need for an assistant anymore. I can just write my word salad onto it, and then Google will help me as an assistant. And before the email goes out, it can formalize it for you, and then you just kind of put whatever else you needed, and you can send it. So think about that, by the way. That is a huge amount. So that's automation at its best, and it can do that in a matter. I think it did it in less than 30 seconds. It rewrote my emails in less than 30 seconds. Now I can just write whatever, and then Google will formalize and have it sent out. And that is something that's important. You can schedule emails out. You can schedule all sorts of things. So artificial intelligence is taking the role of those entry-level assistant jobs that people are thinking about. This is why people are talking very carefully about artificial intelligence. So another thing that's going to happen is that communication technology is also allowing for the rise of outsourcing. So when people are needed, you have got these improvements in collaborative and communication technology by which people can start working with people who are not physically next to them. Vernon, case in point, where am I? Am I in the studio with you? No. Okay. We're utilizing communication and collaborative technology to deliver a show through social media and also on air. So the use of technology has shown that is changing, and that is a physical thing in Zambia. There are three people, Vernon, who will benefit from this new economy, and I'm going to go through them: the highly skilled, the superstars, and the owners. And the highly skilled, Vernon, are the masters of technology. Okay, the masters of processes and technology, people who are very good and trained with processes and technology. So if you're not sure if you're a superstar at something and you don't have a lot of money, you better start learning to be good with technology, because that's how you get hired. So advances in robotics, voice recognition are automating many low-skilled positions. So things like data visualization, analytics, high-speed communication, rapid prototyping, these kind of things are going to call for the skills of people. Things like social media management. I want to need somebody who's very good with this and good at using social media technology. So you want to be good with technology, be skilled with technology. I'm very good with things like Excel. I'm trying to improve my skills into other areas, but most of my data visualization tools, when I show you charts and graphs and all of that, that's my skill and proficiency in places like Excel. So I took a tool and I became very good with it. And then I can now express my work through it. and I can utilize it. You need to be good with something. Okay, you can't sit there with your bare hands and not be good with technology. If you are bad with technology, you're gonna struggle. Even people who are drivers on taxi apps, Vernon, if you can't use the map, you're going to struggle to work on that thing. So you need
Mhm.
to start learning how to be good with technology and skilled with processes and technology. The second group of people, Vernon, are the superstars, the masters of the craft. Okay, the fields where technology has made remote work possible. So once talent, that creates a universal talent market. So Vernon, I could have been in South Africa, I could have been in Kenya and still doing this show. So now what's happening is that things like this become borderless. So you can work with people anywhere. Things like media have become borderless. Even you, Vernon, can now watch and consume media that is borderless. You have Netflix in your homes. You've got YouTube on your phone. You have access to all entertainment. So you're not restricted to what the TV stations and the radio stations put in front of you. You now have the option. So if you're a superstar, you're going to thrive. So the superstars on YouTube are now infiltrating the Zambian market and competing with the Zambian people who are trying to put up content on YouTube. And that is why you need to now become a superstar. So practice your craft, deliberate practice, deep work, getting to become the best at what you do. That is how you'll thrive. So you either need to be good with technology or be the best at what you do, because you're no longer competing with your domestic market, especially if you're in knowledge work. You're competing with your global market. Okay, if
Mhm.
you're in knowledge work specifically. And finally, Vernon, the owners, the masters of money. So it's the masters of technology, the masters of their craft, and the masters of money. So as the digital economy grows, Vernon, what ends up happening is less and less people are needed. So most of what happens is the revenue in a company either goes to labor or it goes to capital. That is what happens. So whenever a company makes money, it distributes that money to labor or to capital. Now, if there's less labor, who does that money now go to? Capital, meaning the owners of business are going to make more and more money. So venture capitalists today can fund a company like Instagram, which sold for $1 billion to Facebook. And you know that when Instagram was worth $1 billion with 300 million users, guess how many employees it had, Vernon? 13. Just 13 employees, and there were 300 million people on Instagram. So you realize how profitable these companies are becoming because of that. And that is the rise, Vernon, of the system that everyone needs to prepare themselves for. So that is my final futuristic thought for everybody. Prepare yourself for the future. You either must be a master of technology, a master of your craft, or a master of money. Someone write that down and remember it. Because if you start thinking, how do I avoid not being useful in the future? You have to master one of those three things. Should you fail to, it's highly unlikely you'll be employable. That's the reality of the future. And it's coming to Zambia. I've shown it to you with myself. I'm a master with technology, and I'm a master of my craft. That is what allows me to operate in a free environment. And a lot of people are gonna have to start getting used to that idea. And I'll leave that be, Vernon. I'll leave that be.